Oil prices rise as U.S. inventory data signals strong demand. The global oil market once again demonstrated its sensitivity to U.S. inventory data as crude prices gained momentum following reports of sharper-than-expected withdrawals. According to the U.S. Energy Information Administration (EIA), crude oil stockpiles fell by 6 million barrels last week, far exceeding analysts' expectations of a 1.8 million barrel decline. Gasoline inventories also saw a substantial drop, while jet fuel consumption surged to its highest levels since 2019. This combination of data highlights a simple truth: American demand for fuel remains robust. The summer travel season is playing a decisive role, with both road and air travel contributing to higher consumption levels. For traders and policymakers alike, the figures send a clear signal that the U.S. economy, despite global uncertainties, is sustaining significant energy needs. The immediate reaction was reflected in market prices. Brent crude inched up to nearly $67 per barrel, while West Texas Intermediate WTI climbed to $62.86. Though these gains were modest in percentage terms, the psychological impact is larger, reinforcing the notion that demand is strong enough to counterbalance concerns about oversupply or weakening global growth. Yet, caution persists. The geopolitical backdrop, particularly the ongoing Russia-Ukraine tensions, casts a shadow over the market. Potential sanctions, diplomatic negotiations, and broader economic headwinds could alter the current demand-supply equation quickly. Moreover, long-term uncertainties about energy transition policies and alternative fuel adoption remain in the background. From a broader perspective, the latest developments underscore how closely the world's energy security is tied to U.S. consumption patterns. When American drivers hit the road and planes fill the skies, global oil markets take notice. This dynamic also serves as a reminder that any shock, whether geopolitical, economic, or environmental, can rapidly ripple through the pricing system. In conclusion, the recent rally in oil prices is less about speculative moves and more about concrete evidence of strong U.S. demand. For now, the market appears supported, but investors and consumers alike must brace for volatility, as oil remains one of the most geopolitically sensitive commodities in the world.